Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another huge news week. We've got so much to get through, all the macro headlines, and then a look at the crypto news. I'm going to whip through it all as quick as I can because there's just so much to cover these days, and the two worlds are really intertwined. Now, we do welcome a few hundred subscribers again this week, some fantastic episodes out. We've continued to stack out our range of free education if you've got friends or family just going down the crypto or investing rabbit hole. So head over to nuggetsnews.com.au for all those free resources. And particularly a big warm welcome to another 60 or 70 members in our premium area. So we're now up near 1,800. It really is amazing the level of content that not only you guys get to consume from the team, but also the posts and the debate and discussion in the community has been fantastic. And if you are new to the group, head over to the unit section. That's where all the research is, as well as the rules and all the information about how to get the most out of the group. A reminder that we do have that link down below for FTX. A lot of you are continuing to ask where I do my trading, and the reason I do like them, as you know, is they have their range of indexes as well as all the popular coins. They've got leverage for traders as well as just the spot markets to buy your usual coins. At the moment, they're running that man versus machine trading competition. They've got the quant zone as well as the volatility products and the hash rate index. You guys know how bullish I am on this exchange, and just the innovation, the products that they keep bringing out is putting them as a market leader. Okay, let's get into the local news to begin with. And amazingly, we've got the news now that Australia did have that contraction for GDP. And when we know how bad this quarter we're currently in is going to be, Josh Frydenberg didn't waste any time in admitting that we have a recession for the first time in 29 years. Now, if you followed the channel and you watched our documentary, that should be no surprise to you. But, I mean, in the grand scheme of things, we've got to remember that we're actually going pretty good. So we're right up at the top of this list compared to these other countries where we've had some really big contractions all around the world. In terms of Australia, we can see these mobility trends where people are starting to drive and walk, transit. It's all ticking back up. Now, a lot of countries are experiencing that, but not all countries have had as big a decline in the number of cases of COVID as we have. So we're pretty lucky. I know down here in Tassie, we've had barely any cases for weeks now. So look, that didn't stop the government really wanting to say you can't turn out and protest because of the dangers of COVID social distancing. But last minute, that was, I guess, overturned that decision. And we had tens of thousands of people, not just in Sydney, in most capital cities, protesting. And we'll get into this because this has gone global, really. And it's not just about that one incident anymore. I think it is just the boiling over of tensions and inequality, a number of reasons. Now, those protesters weren't the only people that weren't welcome to begin with. This is number 2 trending video on YouTube at the moment, Get Off My Lawn. Now, if you haven't watched this, check it out. It is pretty funny as Scott Morrison announced the $25,000 home builders grants. Again, this is something that we predicted in Tasmania, also in Western Australia. I think it's just been announced. They're doing further handouts and grants. So not only now do you get $45,000 if you build a home in Tassie, Western Australia, look, maybe other states copy. These are the biggest grants ever that we predicted in that documentary because the housing bubble is so big. If it collapses, it brings down, the banks, our super funds. So the government are just going to throw absolutely everything at that. But if you think about these numbers, WA have said that $400 million will create 4,000 jobs, but the government have said that $600 million will create 140,000 jobs. So look, someone's out by a magnitude or a factor of 10, 20 there. So look, you guys let me know what you think of that down in the comments below, particularly if you're in construction. What is that money? What is it going to lead to in terms of the jobs? Now, personally, I'll share a tweet in a second, but Martin and I have fleshed this out in a little bit more detail in Friday's video. I just want to give everyone a big thank you for sharing these videos because, look, we did start to get shadow ban on YouTube, which means the video won't show up in your description, even if you've subscribed and you've got the bell icon ticked. So look, we do rely on people sharing these videos with friends and family because YouTube is starting to really choose what content it wants to show you or not. So this was a great tweet from Alex Joyner. I recommend you follow him over on Twitter. And this is all about the building approvals. Now, what he's basically saying here that they were ticking along okay. Additions and alterations were doing just fine. We really need that public sector building. People that can't afford housing and still going to give the tradies the jobs. And I think that they've really sort of missed a beat there. And it was just so skew-if. People that were already building a house that have that first grant or the 5% down scheme, I don't know if that's really going to change their minds. But what about this extension program and big renovations? I mean, how many people do you know that are earning under 125k or 200k for a couple that are thinking of doing a renovation over 150 grand? I mean, it just doesn't make any sense. We're in a recession. People don't just have this sort of money laying around. So I think there's going to be a really, really low uptake of this program, and I'm going to wait to see what governments do next. Not only that, but we've seen a number of businesses leave the CBD. So this is all that office space, whether social distancing, working from home, maybe civil unrest in other countries. These factors are all in play for reasons that commercial real estate might be going down in value. Now, something else I shared on my personal Facebook page, which you guys can also follow for regular updates, was this Australian company that set a new record for bricklaying. Now, a lot of the tradies jumped on and said, they're never going to replace the real thing. And I always agree. There's always a truth in the middle. There's going to be robots doing some things, and you're always going to need bricklayers on unique work sites and other sort of trades. But I think it's naive to think that they're not going to be able to build some houses in some suburbs. And when these things keep getting quicker and better, this is why investors are excited. And this company in Australia had a big uptick in its share price because there is a lot of potential there. And at the end of the day, money runs the world. So if this is quicker and cheaper to build a house and build suburbs, it is going to be used. So the other thing that we need to worry about for the Australian economy is obviously that relationship with China. And we've now got China warning against travelling to Australia, citing racism and violence. So we saw the first protests yesterday. They were all pretty peaceful, to be honest. So, don't believe everything you read in the media. There's two sides to every story. But to what degree remains to be seen. But this is going to play a role. Tension and friction between the two nations. Now, obviously, the answer to everything in the minds of the powers that be is drop interest rates and print money. So we're starting to see the first stories, again, another prediction of ours of negative interest rates coming to Australia. So the RBA urged to take rates negative to boost the economy. And funnily enough, it's been property developers and Westpac chief economist Bill Evans. And as I spoke about in that video with Martin, negative interest rates, bad for banks. So I'm not really sure why they're talking about them. Maybe they think they're going to get so much stimulus and handouts from government support that it's going to, outweigh the profits, margins that are getting squeezed. So New Zealand are really taking an opposite approach. They've been very open and preparing about negative interest rates, talking about scrapping cash, whereas Philip Lowe and the RBA are really playing down the possibilities. So negative interest rates in the US, they're needed for a V-shaped recovery, according to one Fed economist. So the Fed want to feel useful. They're out of tools basically, but they really want to show that they're still really important with dropping rates and printing money, which funnily enough, governments have learnt that they can print money too now. So negative interest rates aren't actually that new. Yes, they've been in Europe for a little while, but they're actually tried back in the 70s. And this was a really interesting article about when Switzerland became such a safe haven, they actually started penalising deposits in banks. It got so bad, they end up charging 42%. So a minus 42% savings rate on your bank account, but even that didn't stop the inflows. So that's what can happen when we have these currency wars and one currency ends up becoming the king, which, at the moment it's been the US dollar, maybe not really recently, but that is something that you've got to be aware of, that momentum can really drive that euphoria and herd behavior into one currency. So Japan have tried it. This is the past 30 years where they've been printing money and they've kept rates at zero. Public debt has just gone up and up and up, 230% of GDP. So they're never going to pay it off, but everyone's just sort of kidding themselves and just kicking the can down the road. China to launch QE to jumpstart the economy. Once again, it's these non-financial corporates that have gone into a lot of debt, and we've started to see defaults. This is the big issue all around the world at the moment, particularly in cities. So Shenzhen has adopted China's first personal bankruptcy laws as small businesses and freelancers are facing financial ruin. So what they're basically saying here is that if someone defaults, they will carry that debt until death. So remember in the US, in the GFC, you could hand in your keys if your mortgage was bigger than your house. In Australia, you've got to carry over that debt. And now in China, you've actually got to carry that debt held liable until death. One thing I just wanted to mention about the COVID side of things, and I've always said I'm waiting for the dust to settle and for more information to come out, and it's not probably as bad as a lot of people, including myself, first thought once we got everything under control. But this study was retracted. So they said that the hydroxychloroquine has been linked to increased risk of death and heart attacks. A lot of the media are trying to tie this to Trump, saying that he was taking it. But that study's been retracted by the Lancet study, and once again, people are saying we need more unbiased data, and that's really hard to come by in the world of medicine. You've got to do big numbers and have a number of differently constructed studies to really get unbiased information, and we're still waiting for that, as well as a number of vaccine trials that are starting now all around the world. So over to the UK, where home prices have fallen at their fastest pace in a decade. These are the, deflationary events that we're seeing one by one in all these different cities. Remember, the Bank of England said that the UK is in its biggest slump in 300 years. So while everyone's thinking that the stocks have had a V-shaped recovery and we're unlocking out of isolation and things are going to go back to normal, I honestly think that it is going to take at least a year, maybe two, to get back to anywhere near where we were in terms of GDP and everyday life. So Angela Merkel's coalition have agreed to $130 billion stimulus to help boost Germany's economy. Now remember, they are one of the strongest economies in Europe, and this is where the cracks are starting to appear between who gets what. So the euro weakened after the European Central Bank announced they're going to print another $600 billion, taking that amount over $1 trillion. So, another $1 trillion here each week. It seems to be the way that it's going at the moment. It's all part of these, emergency COVID packages or whatever they want to call it. That, they've got to pin the blame on something else. It hasn't been decades of bad management. But the ECB have also disclosed their purchases. So as part of that emergency program, or who were they handing money out to? And this is where the tensions start to rise. So Germany have got the most, but is it the size of your population? Is it the size of your debt, your economy? How do you really get to choose who that money goes to, but who needs it the most? And so are we going to see Italy be the next country to leave the EU? And if you've got debt, they're forcing austerity on you. This is where Professor Steve Keen is fantastic, because he talks about if you're trying to get people to pay down debt, particularly countries where their central bank or where their government can't issue more of their own currency, by the very nature of what you're describing, the economy is getting smaller as you're taking money out of it. So this is why they can never fix this problem, because the economists' models are wrong. So no difference in the US, where their exports and imports are cratering. So most on record after, sure enough, the trade deal with China has gone backwards because they just can't keep up with the promises that they made. $50 billion of agricultural goods. Their economy is, sliding. They're not just going to buy $50 billion worth of food or different commodities or whatnot when they don't need it anymore. So this is just the reality of things at the moment. Factory orders crashing most in history in America in April. We've seen Wells Fargo talking about these defaults. So it's this feeding and flow-on effect down the food chain. So we see the auto sales down. Sure enough, the banks, they don't want to make loans to car dealerships anymore. And then we see consumers, they're not paying for things anymore. So they're so worried now that they've started to pay down their debt. And that is the antithesis of what central banks want. when they drop interest rates low or negative, they want you to go out and spend. And people, psychology and sentiment, like I always talk about, is driving people's behavior. And they are paying down debt and they're saving whatever money they can. A huge jump in personal savings rates from under 10% to over 30% there. And also we're seeing that in Australia. So half of the world's food staples are up 70% this year. So beef prices have ticked back a little bit just recently in the past month, but this is things like rice that are just commonly consumed all around the globe. And that is the flow-on effects of the US dollar, and we've seen food going to waste. The supply chains, it's just the modern world we live in can't cope with these interruptions. And that is what's happened in Venezuela, these countries where you just see they can't get food because of their economy and the way they don't produce these things anymore. And that's a really scary path. Even if it doesn't happen in the US, if this is happening in all these countries around the world, starting to get inflation on food, things can get really nasty. Now, the other thing to mention here is inflation's typically not good for profits and earnings on Wall Street. So higher inflation rates, lower PE ratios. We've seen it just creep in to the US this week, where interest rates have started to tick up, and that is not what the Fed want. They don't want inflation getting out of control. They're just trying to fight deflation. Now, cash as a percentage of US equity market caps, it's going up, but this is really dominated and skewed by those large cap tech companies that are sitting on hundreds of billions of dollars on their balance sheet. So just remember that they are skewing a lot of the data that we read. So an unprecedented surge in these mortgage-backed securities, the commercial mortgage-backed securities. Delinquencies rising, people are defaulting, all that real estate that we spoke about before where people aren't paying their rents, shoppers aren't shopping in the cities. It's that flow-on effect. And this is a huge jump from 2% to 7%. So this is the CLO market that I'm really worried about, that these mortgages are packaged into those pretty little bundles and sold to investors because of the yield that they offer. And California is a prime example here where they face financial collapse, and it's moving to allow businesses to walk away from their commercial leases. So you're really just deciding who takes the hit. Is it the investors? Is it the landlord? Is it the bank? If the bank defaults, the government have to step in. So look, when people aren't paying and someone defaults, or you let someone walk away, it doesn't just make everything okay. And I guess that's a takeaway point I want everyone to understand. And that's, again, why the Fed have started to really expand their purchases of all these different asset programs. Now, another one that they've really put the foot to the floor on is the municipal bailout facility. So the individual states and cities that are seeing their pension funds run dry or taxes have gone down. This is the same in Australia, where all the real estate sales have dropped. Those stamp duty, that revenue, accounts for 50% of the government takings in some of these states. And now that's dropped off. And that's why you see them talking about, well, we're going to start to do a yearly land tax because we're not making enough money. So this is all just a big game where the Fed are now having to bail out everyone from the little guy all the way through to the government. So can they keep doing that forever? At what stage do people say, the US dollar is going to be worthless because you've printed tens of trillions of them? Now, Trump is talking about asking Congress to pass more stimulus. He's praised the V-shaped recovery. So, look, if $1 trillion is good, another $1 trillion is better. And going into that election, where I know he's been dragged through the mud by the media, but I think he's going to want to do everything he can to make the economy as good as possible while he's president trying to get re-elected. That's just common sense. So, look, it looks like the White House might be preparing for that. Again, the US subscribers, let me know what you think about how likely this is in a time frame, what's going on in terms of the media's reporting of Trump versus what we're, shown in other countries around the world. Now, Wall Street aren't really buying the Fed's ability to lend to Main Street because the stocks are ripping higher, and it's very clear now that the wealthy have really benefited. We've also got a small sector of retail investors that are piling into stocks blindly. I'll talk about that in a second. So they've benefited, but it's these Main Street lending programs which haven't had a big take up because the small to medium-sized businesses just, they don't want to take the risk and go into more debt. So the Fed are thinking about what they can do there to help. And they've already unleashed $1 trillion in new debt. Companies took that money and sure enough, they spent it on dividends and they fired millions of people. So there was nothing in the legislation about how they needed to spend it. And look, other countries asked, or some countries even required, that they not do these buybacks and dividends. While in Australia, they cut it back a little bit. In the US, some of them cut it back a little bit. But look, the evidence is clear. Profits are down. Look at this ratio between the corporate profits after tax and the S&P 500. It has got out to a wide spread before, and that was before it did have a really sharp correction. But the couple of final slides that I'll get to tying this all together, I think are really going to shock you here, guys. So look, the looting has broken out. That's been the biggest story this week. It has gone on every day for nearly 2 weeks now. And we've had these heavily armed soldiers moved into these different cities. And look, it's no longer about that one incident. And I thought this one was a little bit funny. I wanted to throw it in there just to lighten the mood a little bit because 2020 continues to be the strangest year. And if you had told someone all these things that were going to happen, and if you don't know the significance or the name of this band and the song, Google it later on. But Anonymous taking over a radio station to play that song by that band, it is just one of those moments where you say, how much more bizarre can this year possibly get? Now, Trump, again, he was criticized by bringing in George Floyd into the discussion, and he celebrated and had a press conference as soon as they got those good unemployment numbers, way better than anyone was expecting. Now, if we actually look into it, we can see African American unemployment, it's a lot higher than white unemployment in America, but more importantly, it didn't actually tick down. So with that number that they're talking about, it's got really no relation to race or color. So look, I just wonder why he says things sometimes. Is there any need to drag that current event that's really topical into it? I'm not sure. I would probably leave it out of it. But you guys, again, let me know what it's like, if it's the media blowing out of proportion or you think it's the right thing to do to talk about that. And speaking of talking, guys, I know the last few episodes have been really long, so excuse me if I do have a drink or two, because talking for over half an hour without a break, you do get a little bit dry. All right, so a third of Americans who lost their job in COVID are still waiting for those unemployment benefits to arrive. So this adds to the tensions, I guess, if people can't even afford food. The food stamps and the food outlets are being really strained in the US. We know some people are waiting on a physical paper check. So not a lot, but there are some people that are in that boat. And it's a huge undertaking trying to get these benefits to literally, 100 million people. But the real unemployment numbers are a lot higher than what was reported. So as soon as this came out, the Bureau of Labor Statistics, they report that unemployment fell to 13%, but the agency admitted that the real unemployment rate is likely 3% higher, around 16%, due to an error. So I think we're probably going to get some information come out at the start of next week, and maybe the market will give back a little bit, because this was really a shock that things were this much better, and the numbers just didn't add up and didn't make sense. When you look into the granular data, we can see that in the month when the US was shut down, the Bureau of Labor Statistics estimated that 345,000 new businesses were formed. That just makes no sense whatsoever. And looking even further, if you have a look, the number one job was dentist office employees. Apparently 245,000 were employed in 1 month. Was everyone going to get their long overdue dental checkup because they're in isolation? Weren't dentists closed? I think this could be a huge error that they're going to have to take back. This is a good chart just showing the different jobless claims for the different industries. We know that everyone's got to eat, so agriculture is still ticking along, but it's really that accommodation and food services, retail, trade, they're the things that have been hit that we need to bounce back for the economy to get back to normal. Now, there are another wave of job cuts coming. likely millions of people, but this time the higher paid workers, as it's filtering up to these jobs, people with really good qualifications, high paid workers that are also going to need those benefits. This is at a time when the Fed have tapered their purchases, so crazy that $4 billion a day is now considered a small amount for the next week. Remember, at one stage there, they're doing $2.4 billion of buying an hour. And you wonder why the rich are getting richer. But despite all this, what I wanted to mention here was that the interest rates, the yields in America are going up at a time when the Fed, they want to taper. They don't really want to be buying. Now, if they step in and buy, that's what needs to be done to drive interest rates back down again. But I think the Fed aren't going to want to let interest rates creep up and get any higher. They want to stay on top of this and keep a lid on any possible inflation that's creeping in. So we've seen this money flow back into assets, fixed income. People want that yield as it's creeping higher. They want to lock that in while they can, as well as equity markets. This has meant that gold is a little bit more unfavorable in the eyes of investors as yields are creeping up, particularly the real yields here. So look, this is the chart of gold inverted against those yields. Other way around. And what we're seeing here is that gold is likely due for a bit of a pullback if that correlation and relationship holds true. And sure enough, it did play out that way. So this came out on the 5th, and we have seen gold just have a little bit of a pullback in recent days. Now, a lot of those were the speculators dumping gold. And that's a really good thing. So remember how we've been talking about all these speculators and leverage longs are in the market? And we can't really, it's not healthy for a bull market to continue with all those gamblers in the market. So watch this out. Let the gold market gather momentum, have a retracement for its next leg higher. I really think this is all still very, very healthy action. This is the ratio of gold to the Dow Jones Industrial Average, the commodities index including gold. You guys have seen these before, but it's just really showing that the commodities are radically undervalued as much as they've ever been throughout history. An even more extreme example of this is the NASDAQ, so the tech stock index compared to commodities. This is an absolute bubble here, more than double the previous historic peaks here. So what's that saying? Well, we know that people are just euphoric. So once again, the put to call ratios, everyone's buying the calls. They're betting that the market's going to go up in future. NASDAQ volume hitting record highs. People are just piling in to tech stocks. And I just cannot figure out why on earth people are buying some of these stocks. So Hertz, since they announced that they are bankrupt and going into liquidation, the number of investors has doubled and the stock price has been going up because of these retail traders on the Robinhood app. Genius Brands, I think this is one that sells CDs and DVDs. This has gone from basically no retail investors. You can't quite see this behind me. So a few thousand up to 150,000 investors hold this stock that sells DVDs and CDs. Another one here is the cruises or airlines. Someone correct me in the comments below, CCL, but one of these industries that's going to be heavily affected, and travel isn't coming back anytime soon, but the number of investors has gone from near zero to 500,000 that own these stocks, and price has been going up. So this is the side effect of having some of these trading apps that show whatever stock is down the most, and retail investors thinking whatever's down the most is probably going to bounce back and go up the most because the Fed has got our back. So that is not the way that I'd recommend you use those apps. So it's pretty obvious this is going to end badly. We're seeing some really smart people and heads of funds come out and say this now. So he's eyeing off a historic reversal and he's gone short against the US stock market. But one thing that I do want to mention here, that a lot of people have got the same mindset, and we've seen huge short positions now build up. And look, it can be wrong, and I've said a number of times it's a parallel universe, but even I've been surprised how quickly and how high the market's gone. But if we've got all these shorts and they continue higher, they're going to get burnt, they're going to get squeezed, and we could have an even bigger blow off top crazy run that just shocks absolutely everybody. So hedge fund CEOs, stocks are going parabolic for all the wrong reasons. Look, you can complain about it and say that the Fed made a mistake. Maybe they did. Maybe the Fed put way too much liquidity because they were scared at how big the crash was going to be. And now it hasn't turned out to be too bad. So they've created too much money and too much inflation, or it's all gone in to the stock market. So look, the Fed are flirting with moral hazard, as the Bloomberg article says here, but they need to keep markets open. I mean, I know how I think that this is going to play out, and I don't want to invest just on that thesis that you should buy because it's going parabolic and it's a bubble and chase it higher. I'm quite happy to be defensive at the moment and look to add to positions when we do have corrections, or play around in other sectors that aren't in these bubble valuations. So once again, S&P 500, they're starting to announce these big buybacks. Yes, it's the tech stocks that have a lot of cash on hand, like I spoke about before, and it's the large five. You can see in percentage terms how much they've outperformed the other indexes and other stocks year to date. And in terms of the percentage that they make up of the index, the top five now make up 20% of the S&P 500. Now, with all this happening, Amazon, of all people, are issuing bonds at record low yields. They've got a heap of cash, and a lot of these tech companies do, but why not take on some more debt? Why not use that to buy back your shares? This is just the game, the merry-go-round, and I've got an unbelievable interview coming out this week with an insider who's going to talk about some of these tech stocks and how they don't pay out any dividends. So look, the monopolies are all wrong. Elon Musk is saying it's time to break up Amazon. We've got states that are looking to break up Google's ad tech business. At the same time, we've got Google facing these huge lawsuits for tracking private data. So even using browsers in incognito mode, they're still tracking all your data. So yes, that trust is being breached. They're under the eye of the regulators, and yet they are the most overvalued stocks. So look, is it finally going to be this rotation back from the growth stocks, the tech stocks, the momentum stocks, back into value stocks? How much longer can the bubble go on? Look, don't fight the Fed for the time being, but I just think that at some stage the pipe is going to have to be paid. But that doesn't mean it can be a crash of stocks. It can mean that we get inflation. It can mean we get civil unrest and inequality. That's the thing that breaks. It doesn't have to be the number on the screen on the stock market that goes down. So this is the thing I want to leave you with, some thoughts here for our macro news. This is the S&P 500 on a log scale versus the S&P 500 divided by the money supply. And it's actually not that high. So just behind me here, you might not be able to see it. It's sitting at this level around here. And that is not historically high levels like we had in the tech, the tech bubble, or even in 08, 09. It's still got room to go higher because of how much money has been printed. There's a lot of money still on the sidelines. Velocity of money is low. So if any one of those things picks up or actually decides to chase the market, if all these fund managers that are on the sidelines or short decide they've got to chase the market and get back in, no, the market, S&P 500 could go to 4,000 and it would make no sense whatsoever. But that is the dynamic, the situation that the Fed has created. And 73% of Wall Street say that the Fed is behind this rally. But Jay Powell is coming out and saying that Fed policies have got absolutely nothing to do with it. And they don't add to inequality. Yet, he's announcing that their Main Street program is going to start soon. So, he's already contradicting himself, but pause the video and have a read over this statement from Jerome Powell himself back in 2012 when he speaks about the concerns he had. The Fed would never be able to stop doing this. The market would cheer them on. They wouldn't ever be able to unwind the position, and they'd be compressing risk. And if they ever tried to undo that, you'd get an equally huge rebound in volatility, and everything that they'd compressed would come back out to haunt them. So he knows that they are to blame, but he's playing dumb. Anyway, enough on that. I just want to quickly mention, in terms of those zero fee trading apps, yes, we are seeing those investors in the US go crazy. eToro have also launched fee-free trading on all their US stocks, and it is fantastic if you're going to trade. But guys, don't make those mistakes that the beginners make. Using leverage, piling into those leveraged products that they don't understand how they work, and the drag that they have, the decay. Buying whatever's down the most when things are bankrupt. These are just dumb things to do. So if you're going to trade or invest to take advantage of the commission free trading, make sure you do your research. If you're a beginner, take advantage of the practice account that they've got. It's fantastic that we get access to these US stocks, but don't go crazy just because there's fee-free trading. And we do still have that promotion running where you get $100 of Bitcoin if you do sign up with that link down below. And I have given everyone their Bitcoin. We're back up to date with handing that out, and all the FAQs on how to qualify over on our website there, guys. So look, one thing that I'm personally looking over is that correction in gold, and we've got the GDX, the GDXJ, those type of projects that I want exposure to if we get a nice healthy retracement in gold stocks. So that's what I'll be looking at. If you are managing your own wealth, don't forget we've got that partnership with New Brighton Capital. So they've got a free consultation. Jump on the phone and talk to Mike and the team. We've got hundreds of you guys that have taken them up on that. I know they're really busy at the moment. It's coming into tax time, so don't leave it to the last minute. If you're interested in setting up your self-managed super with precious metals, crypto, they are the best self-managed super fund, guys, to help you get set up with all that. A lot of these other funds are not familiar with how to set that all up. So these guys will hold your hand through that process. All right, let's get into the crypto news. So speaking of ads, I am a huge fan of the Brave browser because it blocks all of the ads. And Joe Rogan himself has come out and spoken about crypto and the power of this browser, which is fantastic. He's the most listened to podcaster in the world. 15 million monthly active users use the Brave browser now, so you actually get paid if you want to watch ads, and you can also tip your favorite influencers on most websites. There's a tip button there, and that's a fantastic way to reward content creators. Thank you to those of you that do leave me a few dollars, and one particular investor or follower every month is very generous, so thank you to whoever that is. But Brave has come under fire for this Binance affiliate link autofill. So if you typed like Binance.com in the browser, Brave had an autofill that would type their affiliate link, and Brandon Ike did thankfully come out and apologize and say that was a mistake. That's not the sort of ethos that they want to have at that company, and they are partnered with Binance, so that was, I guess, why it slipped through the cracks. But yes, he has changed that, so good that he's open to that community feedback. In terms of privacy, Zoom is refusing to encrypt those free calls so they can collaborate with the FBI, and privacy is continuously a huge theme, and it's going to be a factor for some users on a lot of apps now, whether or not they do get privacy. So Signal, which is a encrypted app, the use of that is exploding because of protests in a number of countries. These sort of things are tracked and traced in Hong Kong and China when they're trying to ban protests, but now it's happening in the US. Who knows if it's going to happen in Australia? We've been told that, these apps don't monitor you, but we know that Australia have passed those laws to have the backdoor keys where these tech companies have to hand over the data of Australians. So guys, you've got to have privacy online awareness these days, because the world is really changing. It's also for your own personal security as well as safety and privacy. Now, this was an article from The Block talking about Coinbase selling the analysis software to the IRS and the DEA. So Neutrino is the name of the company they acquired that has all the blockchain analytics and data, and a lot of customers, we can see this on chain, a lot of customers are now leaving Coinbase because they've handed over all this data. Indian P2P trading platform has flourished. So yes, the regulations opened up crypto trading in India and we're seeing it blossom. There's 1 billion people there. There's some great exchanges there, and it's a country that really needs crypto to improve the current payment methods they have. Similar story here in Venezuela. Bread Wallet, which is just a crypto wallet, easy to use. It's taken off. It's gone parabolic, the number of users, because of failed monetary policy. These are all the things that I've been talking about constantly for months and even years now. Celsius has got $1 billion, so this is one of the more centralized. It still counts as a DeFi or classified as DeFi, but users have deposited $1 billion and they're earning some rewards on their money for those deposits. So these are the sort of things that are replacing the traditional banking system. Some other cool news here. We've got Walmart China subsidiary teaming up with VeChain to trace food products. We know that's a great use. Some great news items from IOTA here. So they've taken another step towards decentralizing the Tangle and removing that coordinator node. Their next release is called Hornet. This is one where I tweeted last week that I thought IOTA was going to play catch up and maybe get a bit of momentum because it had been really lagging. So IOTA have joined the Eclipse Foundation Board of Directors with some big names there, Bosch, IBM. Look, I tweeted out a photo with the long list of their partners, and it's one of the only coins in the top 20 or 30 that's still down 97, 98%. It was sitting at around 20 cents when I tweeted this out and did a bigger write-up for members as a recommendation or a trade idea. All-time high price was $4 or $5. And since then, IOTA has played catch-up. I think it was up 25% since that first post for members there. Now, the video I did last week on Tuesday, I think it was, the greatest change to money since the gold standard ended. And this was tying together all my thoughts on this digital thick shake theory, as I'm calling it. Now, someone suggested a digital smoothie is a better name. A similar concept, Raul interviewed Bill Tai, I think his name was, this week, and he was speaking about this concept of an electrodollar, where Bitcoin is becoming this money which I guess is packaged electricity from the mining process. So these are all similar concepts with a lot of overlap there. The digital dollar, whatever way you slice or dice this, crypto is coming to disrupt FX markets, traditional banking infrastructure, and payment rails. So we've got companies in the space, as you guys know. Look, Ripple have been trying to team up with the different banks, and they had a meeting this week with Brazil's central bank to talk about institutional matters, but it's a race against the clock. So in Australia, we actually did see Ripple's on-demand network have a record volume on, mainly because of BTC markets. We know that they've integrated with the company, that little XRP company that do payments, remittance, that I did interview on the channel, and the name escapes me. Sorry there, guys. If you can think of that one, let me know in the comments below. But another interesting little piece here was Western Union making a takeover for MoneyGram. So we know Western Union did some trials with Ripple and basically said, no, we don't like the system. Whereas we've got MoneyGram being partnered with or invested, Ripple have invested tens of millions of dollars into MoneyGram. So if Western Union take over MoneyGram, the question would be, well, what happens to that Ripple partnership if they've already trialed the technology and said they didn't like it? Or do they now see something that they like and that's why they want to acquire MoneyGram? So if you follow this one more closely, or the next time I catch up with Sam, I will discuss what's going on there. Another little Aussie company here, this was called Identity, using blockchain software on top of the already existing bank infrastructure, the SWIFT network, to help global payments. So one I hadn't really heard much about, but they did have a couple of announcements this week on the ASX. This article was pretty biased on Livewire Markets, talking about how basically crypto is rubbish, but don't throw the baby out with the bathwater. And as people were saying a few years ago, blockchain is good, but not Bitcoin and crypto. I think this journalist is a few years behind the rest of the crowd. Japan's biggest banks are talking about using their own digital payment system. So, the long list just goes on. But what were the interesting developments for me this week Were central bank digital currencies endangering private banks? A statement made by the Federal Reserve themselves. So this is what I've been saying about coming to eat the traditional payment system's lunch. Digital currencies could replace low-interest bank accounts, says the United Nations. The Fed chairman teasing at the use of an Ethereum-based derivative or reference rate here. So I think the name he had here was Ameribor. So similar to the LIBOR rate. So London Interbank Lending Overnight Rate. All these different banks and the different US dollar, euro dollar markets, we now can have digital versions of these, which is unbelievable. So Delta Cryptocurrency Exchange have launched interest rate swaps. I know this is a little bit, advanced stuff for those of you that haven't traded FX markets or US dollars before, but this is all happening on Ethereum already. And another little company that we've followed since the beginning was Numerai. So they raised $3 million to some of these big venture funds, Union Square Ventures, Placeholder. These guys have had a habit of picking winners, but one guy who's had another habit of picking some huge winners recently is our head of research, Matt Williamson. So follow him on Twitter. He's in the group. He helps or does the majority of the writing now for all our premium research reports. And Numerai, that had that investment announcement this week, was one that he covered for our members back here in October when it was trading for $4. And then in our premium research reports, again, it was trading for around $4 or $5. Now, it hit $46. So it was up 1,000% at one point there. It's still sitting up around 500%. This is about the fourth or fifth project we've had 1,000% win on from doing these fundamental analysis research reports, combining it with technical analysis, on-chain data. Thank you to companies like Sentiment, Glassnode. We continue to be able to pick these hidden gems, and our next research report, for those of you that are interested in those, will be out tomorrow. So if you want to sign up and become a member, you don't even have to join the Facebook community if you're not interested to get all our premium research. And our new platform and app will be out very, very soon. Okay, so fees are rising on Bitcoin and Ethereum, but really importantly, Ethereum is scaling. So in the past month or two, Vitalik himself has come out and said how impressive it is, the long list of scaling solutions that are basically ready, and they're already on mainnet, a lot of them. So Loopring are using ZK rollups, Starkware, ZK Starks, as well as ZK Snarks you might have heard of. So there's a lot of variations of this technology, which not only is private, but scales. Synthetics Exchange have got their version 2 out now, which uses optimistic rollups, and that's a lot faster. Amisa Go, I've got the hoodie back on. Their Plasma is on mainnet. We've seen Tether also move over to Amisa Go because of how fast and cheap it is. Matic Network have launched Proof of Stake and Plasma sidechains. Funfair are using a version of state channels called Fate channels. And then we've got one that I think is another hidden gem. Sorry, I've tagged the wrong Raiden there, but the Raiden network is Ethereum's version of the Lightning Network. Finally, we've also got Ethereum's massive upgrade in the coming months and years where they're moving to that Proof of Stake and they're going to shard up the network. But I just wanted to mention, have I got my write-up here on the Raiden network? So look, this is just a preview for members. Head over and have a read up. Look, I will actually share this one with everyone because I'm in a good mood. We've had a great run lately. So guys, if you want to pause and you want to have a read through that is a sample of the type of research that we do. And I honestly think that Raiden has the potential to be another big winner because of how so under the radar it's been lately. At a time when all these other coins have really been hyped up, and all these scaling solutions, anything to do with Ethereum or DeFi, has become hot property, and it's on Binance as well. So it's got that liquidity behind it. Matic on mainnet, which I've already mentioned there. In terms of sentiment and their research, they've put out top 10 by dev activity again for May. Raiden is on there. You wouldn't know it. Hidden gem. Really liking that one at the moment. This is their outer and mainnet release that they have put out. So I think they're still ironing out the final few bugs. And that's why the mainstream news outlets haven't even really picked up on this one yet, which is crazy. When you think about how much hype the Lightning Network gets, this is Ethereum's Lightning Network, and I just haven't heard anything about it. The other debate that's back, as always, is whether or not Ethereum should increase its block size. It has an elastic block size, so it can go up and down when the miners choose, a lot easier than Bitcoin, which has all that controversy and the hard fork that is needed for everyone to increase the block size if that's the way they want to go. I actually don't think we need to do that. We've got all these scaling solutions coming. I think we're going to be just fine there. And there's that article from Amici-Go about Tether integrating and with Bitfinex. Synthetics have launched balancer incentives and liquidations with their Altair and Halite updates. So a bit of a mouthful there, but once again, the next version of their exchange is just, it's so cool. Head over there and check it out. Have a play around if you haven't already. Loopring, I think they're up to 9,000 transactions per second with the test that they've been running. Diversify using a similar technology, using that Starkware, that ZK technology. So just project after project that is implementing these scaling solutions. Now, one thing I want to mention is the huge premiums that are being paid by investors for Grayscale's Ethereum Investment Trust. So if you actually chart the premium that they're paying, it's 1,000% now. Now, where a lot of people are confused by this is the fact that one unit of their trust is currently trading for around $200 and Ethereum is around $200. But what people don't understand is one unit is only backed by 0.1 Ethereum. So accredited investors, I've had a bit more of a read about it. Accredited investors actually buy the shares for the real price. They only pay the $20 that they're worth. But once they're on the open market and trading, this is one of the only ways that Wall Street investors can get exposure to Ethereum. Now, the shares are locked for a year, but some people just don't trust exchanges or they don't understand the premium. Maybe they think they're buying one Ethereum when they pay $200. You know, we've got all those retail investors buying companies that are bankrupt that we joked about before. But either way, I am looking at a way to arbitrage this because Grayscale have also opened up their products where you can trade your Ethereum for shares in their trust. But yeah, I am looking through my friends and accredited investors because I want to arbitrage this 1,000% opportunity. Another crypto fund, A16Z, have said they expect to see a lot more Libra type projects because money is going digital. Something that I've just been harping on about because I think it's the biggest theme in crypto and the two worlds are just going to collide, and they already are. We've got Bloomberg saying it's a matter of time before Tether overtakes Ether. Again, that's something I started saying a month or two ago. I think Tether could even get to number one, but that's all just short-term noise because Tether is attached to US dollars, which they're printing trillions of, and it's going to end up with no value, the US dollar and Tether. That's when everyone rotates into the digital currency that has a fixed supply, which is, you know, your Bitcoins, your Ethereums, maybe some others if you believe in any others. Bloomberg have also said they expect a record year for Bitcoin to top 20,000. Funny that these huge news sites have turned so bullish on crypto after years of beating them down. We've got exponential volume growth can see Bitcoin become a major asset class, which is what I've been talking about. If we can get enough market cap in the trillions, so bond investors or foreign exchange investors can see Bitcoin as a currency where they can move $100 billion as a trade into Bitcoin. Once we have that liquidity, that's when things get really exciting. And that's why $1 million Bitcoin sounds ridiculous, but you've just got to understand that each time we go up, more things become possible that aren't possible at today's valuation. So look, 20 years time, who knows? Iranian lawmakers saying that Bitcoin should be the turf of central banks. So look, Russia, China, other countries buying gold to get away from the US dollar. Countries that don't like America, they can full well start buying Bitcoin because they don't like the US dollar as well. Maybe that catches on. Maybe China and Russia go next. Evading sanctions, these are all things that have been spoken about and that are upsetting the US with the Petro, for example. But look, it is the war for currencies and the control of money and the control over the economy. So if you've got to play dirty and that means buying Bitcoin, I wouldn't be surprised if we see that in the next 12 to 24 months. Last couple of pieces of news about Bitcoin. We've got another upgrade here helping to protect against nation-state attacks with an upgrade around privacy and IP address. I believe it was covering or anonymity. Anyway, I'll let you guys read up on that latest update there. And this is something that is needed, and the biggest headwind for Bitcoin and Ethereum, I made that video 2 years ago talking about as these currencies go private, that is where they're going to rub governments up the wrong way, but there's nothing they can do about it at the end of the day. So Europol is saying that Bitcoin privacy wallet, it's not looking good for law enforcement because the Wasabi wallet is a fantastic privacy tool that mixes your coins and makes them basically untraceable if you use it correctly. So, look, governments can crack down on that if they want, but there's going to be another version of Wasabi Wallet come out. This time it might have, private developers or no website, or it's in a different country. So you just can't stop software from happening. Lightning Network improvements are going to strengthen privacy. So there's all these different, whack-a-moles that they can slow things down, but they can't ever stop Bitcoin and cryptocurrency. They can only control the on-ramps and off-ramps and only control them in certain countries. 6 million Bitcoin are secured by shared custody. This is fantastic news for security, having things like multi-sig technology to make it a lot safer. The percent of Bitcoins in profit is back up near 90%, and that gets everyone really positive. The sentiment is good. We're not going to have capitulations when the majority of people are in profit. And the other day, you can't quite see it behind me, when we did slip down in March there into that zone where we had a lot of people that were 45%, for example, that were in profit. That's when people get scared and capitulate. A lot of the the noobs that bought here, they bought too high, they see it crashing, they sell. Their coins are now in the hands of the whales and strong investors that bought the dip, and they're all in profit. And these guys that are FOMO'd or panic sold are going to have to buy back their Bitcoins at a higher price. So tying this all together, let's have a look at price. I've been harping on about Ethereum and DeFi. Yes, it has outperformed. So members know, as long as we held this region here on the Ethereum Bitcoin ratio, I was bullish on Ethereum and bullish on alts. That was now on the 14th of May, 3-4 weeks ago. And if we can get out a little percentage, Ethereum's outperformed Bitcoin by around 20%. And in terms of dollars, it's just been an enormous run, really, ever since we retested that $80 region only 2 months ago. Crazy to think about it. $80 up to $240. We've tripled in price. To me, this is a perfect ascending triangle where we've broken out, we've come back and retested it, and we are just accumulating in what looks to be another flag or pennant. The measured move for this would be, sitting there around $340. So that's what I'm looking at on Ethereum. Bitcoin, we're right at this final resistance line. So depending on how you want to draw this, the wicks on the weekly chart, this is really that last resistance to overcome. Now, some traders want to look at this on a log scale, and that's fine too. Either way, look, it's an art, not a science. The fact is we are in a tightening pattern. We are right at the point now where if we can break out above around 10,500, that gives us the new high. That's the final piece of the puzzle to say that, yep, okay, we have finally put in on a monthly time frame, for example, the low, then a higher low, and now we're going to make that high there as well. So that's when the momentum can start to build. We've seen alts and new people getting excited about what's happening in the crypto space. A lot of new people entering the market in terms of the numbers we're seeing, subscribers, members into our premium area, for example. The stars are starting to align. So guys, another huge news week. I hope you've enjoyed that. Take advantage of that $100 Bitcoin over at eToro if you haven't already. That link is down in the description. I hope you've enjoyed this one. Smash that like button. Subscribe if you haven't already. Share these with friends and family, and I'll talk to you again soon. Cheers.